And last, I really wanted to talk about stocks versus real estate. Okay. When I graduated school, I have a stock background. You know, my family was in Wall Street. I was taught that basically when I got out, I was going to invest in the 401k, you know, buy Microsoft, diversify the portfolio, et cetera, et cetera. Now, you know, in 2003, due to law changes, you know, this is where the rise of the syndication has come in, where it's been a lot easier to invest in these, for example, multifamily apartment building type things, right? So what are some of the big differences? Well, liquidity would be the first thing, right? Let's say I have Netflix stock, okay? If for whatever reason I wanted to have, you know, let's say something came up and I wanted to sell my Netflix stock, well, I could have that in cash in 3 days, right? Um, Whereas, let's say I'm invested in a self storage facility, well, that's not going to work like that, right? You know, best case scenario, I can find somebody to buy my position, but then generally I might even be taking a haircut on that, you know? So stocks are way more liquid than real estate. Now, is that going to change? I think in the future that will, but for right now, stocks are way more liquid than real estate. Leverage. Now, look, you can buy stocks on leverage. That is certainly the case with, especially with a lot of these ETFs. But generally, most people are buying stock, you know, outright. Whereas real estate, by definition, is levered, right? A lot of people, when they're buying a home or if they're raising money for a deal, they might be raising 30%, 50% of the capital and then borrowing the rest from the bank. So when you're buying real estate, you know, I do see a lot some deals where people are buying it outright, but generally you're going to have some form of leverage, right? Where in stocks it's usually not the case. And for me, this is a big one too. You know, public markets versus private equity. Your stocks are going to be the public markets, and real estate is going to be more like the private equity. And I think this is important because public markets have to, for example, Netflix, let's say Tesla, all these stocks, right? Microsoft, they have to report quarterly, right? And this stays in, you know, it's not like they can just erase that. You know, this is all public information. You go back and see ExxonMobil's earnings in 1980, right? And what their dividend was. So it's very strict as far as the reporting requirements, whereas private equity is a little bit more relaxed on that. And this is where, you know, if I'm investing in a real estate deal, I'm going to vet out the people that I'm dealing with. You know, it's pretty easy to vet out a stock, right? You have all this public information, but these private deals, private equity deals, real estate deals, you know, how do you avoid, you know, investing in a bad one, right? And, you know, my advice would be, you know, Adam works with some solid people. You know, I would invest with very reputable people that have solid track records, right? Um, and I'm not going to say there's more abuse in private equity because there's certainly a lot of scandals in public stocks as well. You can look at places like Enron and things like that. But I think you really got to be careful when you're investing in a real estate deal for that reason, for the reporting requirements. REITs, that's real estate investment trust. That's like a combination of the two, right? So it's generally going to be more liquid, right? And that brings me to really the last point is risk versus return. You know, for this liquidity, if this stock is paying me, let's say I got dividends paying me 2.5%, but right, I can have my money tomorrow. This real estate, I can't have my money tomorrow. So for that, you're going to have to compensate me for that risk. So if I'm getting maybe a 2.5% return on this stock, I might have to get maybe a 4%, 4.5% on this illiquid investment to make it sense, you know, to make it make sense for me to invest in it, right? So generally the risk versus return in stocks versus private equity, and obviously you take that with a grain of salt. I think there's a lot of speculation going on in both markets right now, but you can look at a lot of stocks, look at like Tesla right now. It's, you know, these stocks that are jumping 5-10% in a day. So I'm not going to say that there's not risk in that regard as well.